Hi there, this is Brandon Bischoff with Canterbury Investment Management, bringing you this week's Canterbury Market Update for the week of December 2nd, 2019. And I hope everybody had a wonderful Thanksgiving and was able to spend time with, friends and family and, be together for that time. But moving into the market state, we are in market state 1, which is one of the 5 bullish market states, and we're looking at the S&P 500. Most new market highs are put in during market state 1. And as a consequence to that, a lot of pullbacks begin while in market state 1 coming off of those highs. So that's something to be aware of. Canterbury Volatility Index currently measures a volatility reading of CVI 51. That is low and decreasing, which is a bullish, market characteristic. But 10-day CVI, or a short-term Canterbury Volatility Index, is still at extreme low territory, and when that happens, you're more likely to see some of that pressure get released in the form of an outlier day beyond 1.5% up or down. So that is something to be aware of. We don't really know when that'll occur, what extent it'll have, but that is just something to be aware of. And this week we're going to look at the advanced decline line. We call that the AD line, and it shows the number of stocks advancing versus the ones declining. It is a market breadth indicator. And so a bullish sign on the advanced decline line would be if the market is putting in, if the market's going up, putting in higher highs, you want to see the same thing happen in the advanced decline line, because that shows that, the troops are out in front of the generals and kind of a rising tide is lifting all ships. The opposite of that would be if the market's going up and the advanced decline line is not putting in higher highs and putting in, lower highs. That basically says that a bunch of heavier weighted stocks are pulling the market upward, while some of the smaller weighted stocks are actually sort of falling off. So if we're looking at a chart of the advanced decline line and the S&P 500, this advanced decline line is actually taken on the S&P 1500, so there's a larger number of stocks in that. We can see at point 1 where the S&P 500 puts in basically a relative same high as it had in the previous month. The advanced decline line actually puts in a higher high, which is kind of a positive sign for the market. And then at point 2, where the stock market goes back and puts in kind of the same low it had in the prior month, the advanced decline line puts in a higher low, which is again a positive sign. You can kind of see the advanced decline line sort of flatten out toward the end there, where the market's going up and the advanced decline line is flat, which you don't necessarily want to see. But then at point 3, as the market kind of breaks out to a little bit of a higher high, the advanced decline line also kind of breaks out to a high, which is a positive sign for the market. So the advanced decline line is kind of confirming that movement. So if we're looking at the Canterbury Portfolio Thermostat, the Canterbury Portfolio Thermostat is currently efficient and has low and decreasing volatility. Benefit diversification is 53%, which makes it pretty stable. The Portfolio Thermostat currently holds a wide variety of asset classes, anywhere from sectors and industries to a style index or a U.S. style index, international equity, commodity, and even fixed income. So there's a wide variety of assets invested in within the Canterbury Portfolio Thermostat to create that efficient portfolio. But bottom line, the S&P 500 is in a bullish market state right now. There is low and declining volatility. Volatility is, short-term volatility is still extremely low, so be on the look for an outlier day. And the advanced decline line, is currently kind of confirming sort of some of this movement that we've seen in the market recently. But Canterbury Portfolio Thermostat is currently positioned to be efficient in this current market environment, and as markets change and become more and more dynamic, go from a bull to a transitional or even to a bear market, Portfolio Thermostat is an adaptive portfolio strategy and can adjust its holdings accordingly. But that brings us to the end of this week's market update. Hope you have a great week.